following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Wow, sea of green. That's all I can say. And 2065, 2066 on the S&Ps. No dice yesterday as far as holding up and close above. And looks like the globe is pretty happy now. We are, though, to not get completely carried away. Let me repost my chart here. On the weekly, we talked about this level up here. Again, inflection points, 2095, 2096. We're there. We don't have to back off this. I just want to point out, as we go into the scanner and we look at the breath situations, we crossed over again to positive territory, 11th, 12th, 13th in that general area. But some of the heaviness in the S&Ps, you know, the gapping down yesterday, the retracement back up into 2065, 2066. Talked about picking a battle there again. That's what stops are for. But we, you know, pretty much raced past it. Oil corrected yesterday a little bit, not breaking out, just gapping down and moving up. Market likes that. Market likes any hint of good news right now. And we looked at the globe the other day, going back to our indices section in the scanner. Let me pull this up. And we talked about 17 times 4, 68. We had one time frame out of 68 time frames on 17 indices that was red. That's pretty unbelievable, and that was on a 60-minute time frame. So, again, you know, markets moving up. We're going to talk about the Nikkei today. The only thing kind of lagging right now is the Shanghai, and as you know, Shanghai moves down lately. It seems to cause the S&Ps to move sideways at worst. Here's the Shanghai. Just kind of stopping around that unfair high on the weekly, 30.56, but U.S. markets have kind of disengaged from what's going on there for the most part. Let's take a look at the notes really quick, and we're going to go back to the S&Ps in a little bit. Notes are holding up extremely well. You got a support area, 130.07. Again, we're kind of down there. That's where I'm orienting the stops personally below that area. And again, it's interesting that we are also at that 2096 area on the S&Ps, that weekly unfair high. I don't, you know, we've come a long way really quick. I tried to pick a battle yesterday at 2065, 2066. That didn't work. The breadth is kind of telling me the internals are becoming extremely positive. That's been the case all along on the weekly. I want to show you this. Going back to the scanner, going into the S&Ps, pulling up our weekly breath. I thought personally we were a little overextended. We crossed without question into positive territory again. Week of the February 19th into the 26th. We're in April now. We've been in positive territory. I know we reached some pretty serious extensions and had our weekly breath at just incredibly. I mean, right now we've got 19 stocks out of the S&P that are trading below profiles on our weekly. I'm going to pull this up and show you really quick. Let me find the S&Ps. I'm losing my mind here this morning. The S&Ps, we're going to go and just choose below on the weekly. There it is, 19 stocks. Kind of amazing. So we're at an inflection point. We try to always increase the odds. I'm not a huge fan of just completely laser focusing on trading the S&Ps all the time. If you watch this show, you know I talk about it a lot. But how do we increase the odds? We always, you know, heck, okay, let's say we're at an inflection point. Market may pull back. We talked about the XLU yesterday. We're going to talk about that again. I want to rehash some thoughts on that. But, what are the weak instruments that may be as least painful as possible if the market does rally again like yesterday? Here's some stocks that are just not looking that good. H&R Block, HRB. We talked about Hormel Foods a while back. I want to kind of revisit this and show you. This is one we had on our radar screen because we were sitting on the bottom of profiles and then breaking below the dailies. Again, this stock has just gotten creamed, and it was on our radar screen from the scanner a while back. I also want to make note today, I forgot who it was. I can't recall the name right now. Talked about SCTY, a solar stock. I want to talk about that because we've got some solar stocks in the news right now. And if she's listening, maybe she can chime in the den. Monster Beverage, that's been, again, let me get our chart up here in our scanner. Let me restart that. Well, let's get it up here. Okay. This is one that, again, last week started showing some weakness, getting below weeklies and dailies, not cooperating whatsoever with the market going up. So, market may come off this 2096. We're extremely breath positive right now. That's the bad news to put on these shorts. When you want to really kind of dig in and have a change in tone in the marketplace, you do want some cooperation with the breath. We've been kind of doing little trading opportunities, letting the market come to us. I thought gap down yesterday, rally up in that inflection point. We may just kind of relax a little bit, but that obviously didn't happen. Oil really helped that situation, which we're going to visit in just a bit. Maybe it's the New York primaries. I don't know if you guys caught the open house or town hall or whatever it was when Bush and his family were, or Trump and his family were up there. Why wouldn't that guy act like that, in his normal discourse? He just seemed like a completely different person, and it was refreshing. Made me feel a little bit better. ICE, this is one that's just been kind of dogging around below profiles. Again, not acting very well with the market at all. CME Group, similar situation. So these are the ones that, again, relative to profiles are just, can I say crap on the air? Or crap. This is one, Western Digital. We've talked about this one a while. Here's the selling point here, in my opinion, 44.35 into 42.91, that DMZ. I wouldn't back up the truck on that. But again, you've got some weak stocks here to focus on. If you think the market's going to come off 2096 and there's an opportunity there, again, you don't want to be really selling strong stocks in case the market goes higher. Gap stores, man, this one's got another leg waiting on the downside here. We'll be right back, guys.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Here's gold. Again, getting above 1242, 1243. Silver's enjoying a massive run right now. That's your new support area. We talked about waiting. We got to get outside these profiles again or come down to support 1211. Looks like you might be able to kind of lean on that for some defense here. Yesterday hit it, backed off that general area. Now we're, if we get a close above there, that's going to be powerful, but you could play around with that intraday using that as a support situation. We've already today, if you just look at the shorter term time frames, which is kind of cool, we ran up, we came back and tested that 1242, 1243 area already today. If you were up a little earlier, and I guess that would be middle of the night for Tammy, we've already kind of gone up and retested that daily unfair high, so that's the situation there. Let's take a look at silver. And this is pretty wild. We never came back and retested that 1578. It's just been a runaway freight train, now clearing 1639, 1640 on the daily. Got to look at that as support now. These are breakouts. This is a big change of events for silver. Gold, not so much so, but silver, yes. I think we have Joey on the phone with us. Joey, you there?
Yeah, I'm here.
Wow. Where are you today?
I am in Beijing, China.
Wow.
And I'm at the Tsinghua University, which is basically the Harvard or MIT of China, just on the campus right now.
Great. We're still going to try to have Mustafa on from Saudi Arabia today, guys, about the oil situation over there. But Joey, this is great that you were able to call in today. Is Skype blocked there? Is that what you said earlier?
Well, it's not quite blocked, but it basically it does. It's
right.
They kind of screw it up so much that you're not having a good conversation anyway. So, yeah.
You mean the monitoring that's going on is kind of affecting the
I
the
don't
transmission?
think it may or may not be. I don't know.
Okay.
But it could be just bad Wi-Fi. But
Right.
I don't know. Who knows?
Let's lay it off on government monitoring. Hey, look, there's so much to talk about today. What's on your mind? Because I can throw some things out there to you, get some opinions if you'd like. But what's on your mind?
Yeah. Because I think you were just talking about gold and silver,
Yeah.
oil, platinum. It's all kind of going again,
Right.
and it's been an absolute yo-yo.
Copper looks like it's
But
not
we've
doing
been
bad either.
stuck in
Like
range.
copper's starting to kind of form a base here. It looks like, at least. I was noticing that too.
Yeah.
Right. So
Yeah, that's right.
you think it's time to take the money and run on silver, or what? Have you had a chance to kind of focus on that at all?
Yeah, I honestly did not think that silver was going to break out.
I didn't either.
Because I think oil. I mean, gold hasn't broken out yet, and silver's breaking out, which is kind of odd because copper hasn't really done much, and platinum is actually near the highs and
Right.
ready to break out above the 1,000 again. So, it's kind of odd moves here. I don't know. All I know is that silver has broken out, and is looking pretty good. So I'm not going to necessarily go against it. But it's just odd. I don't know why silver would be breaking out here and not gold or copper.
Right.
It wouldn't really make that much sense.
How about the Shanghai? We've kind of reached that 3056 general area, and we've kind of backed off those weekly unfair highs. And you're in China, obviously. What's the is there any general feeling over there right now? They've adjusted their numbers a little higher lately, but the Shanghai's kind of stalled here. Like, what's your general opinion?
My general opinion is that nobody's really in the market. It's like it's shaking everybody out.
Right. People are scared.
So there's not that much selling pressure necessarily. But nobody's really participated much on this rebound either. So I guess people have been so pessimistic about the Chinese economy, but I'm here. I don't see a slowdown necessarily. It's still going gangbusters as far as I'm concerned. So, I mean, I think it's definitely slowed down from 2 years ago when it was just, on fire. But the economy is still going all right. There's no hard landings here or anything like that. You don't see anything like store closings and stuff like that. Everything is still full.
Wow.
When you go into the stores, it's still full. Like my friend was just telling me in Shanghai, they were trying to rent an apartment, and literally everything in the city center was full.
Good God. What about the so-called ghost towns where they've got all this extra space, or are they just not even? Those aren't even outfitted yet, or what's the story there?
Yeah, I think there definitely are a couple of ghost towns out there, and the press makes a lot of bigger deal about those than the fact that the cities are absolutely bursting, to full capacity. So I think, looking at the cities and how they're absolutely to the brim is probably more important of an indicator than the few ghost towns that they have out there, because the government has allowed those loans to be rolled over by the banks, even though they're going to be,
right.
As far as we're concerned, they're non-performing. But for the government, they've basically allowed the banks to roll those over at cheap, at cheap levels. So the banks aren't hurting. They're going to be allowed to roll most of those loans over. So I mean, in essence, they've done similar to what Bernanke did, which was basically.
I was going to say,
rates,
who are we to talk?
Low.
Yeah, exactly.
What's that?
I was going to say, who are we to even comment on somebody rigging the system? We're
Exactly.
we're the champions of doing that.
Absolutely. The Fed wrote the book, right?
Exactly. Can you hang out for another section? I want to ask you a couple more questions.
Sure.
Okay, great. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we still have Joey Jung on from Hong Kong. Joey, you still there?
Yeah, I'm
great.
Here
Man, how's the traffic there, by the way?
The traffic is so awful that I actually only make it a point to take the subways. And the subway is probably one of the biggest subway systems in the world. I mean, it's just massive. I should send it to you so you can just post it on to the viewers to let them see. But it's just massive.
Yeah, that was the biggest shocker when I went to that city. I don't know if people want to look into it on Google. There are 6 major loops around that city, and they are jam packed, seemingly 24 hours a day. It was the most shocking thing I've ever experienced.
I think China has the record for the longest traffic jam in history of mankind. There was a 10-day traffic jam outside of I don't know, Beijing or something like that, where people were stuck in their cars for 10 days.
Good gracious! Oh my God!
Look
I
it up.
actually
I mean,
believe
it's
it.
on Google.
I believe it.
See photos of it. It's crazy. Just look up. I think it's got to be in the I don't know if they did an official Guinness Book of World Records, but you can actually just Google it and you'll see photos from it. It's crazy.
You know what was wild there too is when I was trying to cross streets, walking at the intersection. I mean, there wasn't a lot of hey, there's a human being there. I need to slow down and possibly stop. Nobody seemed to care. It was wild.
Yeah.
Hey, look, can we talk about the Japanese yen for a bit?
Yeah, sure. I mean, I think 105. I'm trying to put a limit order in there for 105.70 or something like that. I don't know, 105.88 or something. Just to if it does pop down, I don't know where it is because I haven't been in front of my computer. Where is it now?
Well, we actually had some more kind of rhetoric coming out of Japan. Some decent things that would make it kind of get more devalued again. It bounced off those unfair lows pretty much yesterday, 108.13, and now we're back up into the unfair highs on the daily, 109.61. But we're backing off of there now, just slightly. I'm with you. I mean, with all the stuff, I mean, I still think this thing's headed lower, and I think for guys watching the show, just again, wait to pick your battles around these inflection points. That's probably the safer things to do. And I'm looking at this pretty much primarily from the short side still to sell rallies and inflection points.
So this basically, this is like a prime example of what happens when you overuse monetary policy to try to, John, you and I keep on saying this, and I don't know if we can ever say it enough, but central banks were not created, around the world to make people money in the stock market, and that was never the charter of any central bank, and yet people forget that. So I don't know what else there is to say. Every time the stock market drops, the central bank feels that it's their duty to come in and do something so that the market goes up. Well, it was never intended for that. It's never useful for that, and eventually it doesn't work. And so, Japan has been using their central bank to try to prop up the economy and prop up the market and do artificial things to the yen, and the market is telling them to, go to where. So, and the market is taking over.
It is truly amazing. I mean, you get a weak downtick in the U.S. stock market, and the Fed steps in and starts making comments. I mean, it is utterly ridiculous. I mean, and again, like you said, that is not their role.
Yeah.
And this could end terribly.
No.
Yeah. So. How's the?
I mean, I love Grandma Yellen. I mean, if anything, we should name some cookies after her or something because and anytime anything bad happens, like, oh, you're sick, I'm going to bring you chicken soup and lower some rates and,
I hear you loud and clear. Man, the Nikkei took off, retraced back down into those daily unfair highs around 16,401. I'm showing it on the chart right now, Joey. We always talk about the most powerful trades is kind of the breakout and the retest. That's pretty much what the Nikkei did. And with the, the comments coming out from Japan, I think you guys, I'm just going to interject a couple of things here, Joey. Targets on this would at best be 18,317 on the Nikkei. That's the unfurled on the weekly. So you got a chance to play defense here on the breakout on the intermediate, but remember, you guys got a big lid around 18,317 on the Nikkei.
Yeah, don't get too happy.
Exactly. Yes, exactly. What about the notes? I mean, I talked about these earlier, the Treasury notes. Do you think they're going to just kind of churn around here at worst and look for bids?
Yeah, it is. It does look like it's turning around, but like you said, it's one of those things where you almost, look at the unfair lows and just go, you know what? I'm just going to buy every dip every time it touches the unfair lows. I'll just buy it. And
I mean, why not?
And then if it breaks, then it breaks, and you take a small loss because it's only a few pips. But I don't know. It just I've been trying to short it, but it's one of those buy on dips, as you said.
Right.
That's always been the thing that's worked.
What about oil? You still think this is going to be contained here and just kind of, bounce around in a kind of a long-term profile, or you think we're poised to break out? We had a pretty good reaction yesterday. I mean, the Kuwaiti fundamental news, the Kuwaiti strike kind of limited, the bearish news coming out of the Saudi-Iranian talks. But, I mean, long story short, we're still within a long-term weekly profile. Do you think this thing has a chance of breaking out on the upside, or you think we're just going to slough around here and kind of fade away again?
I honestly, some of the technicians are looking back at the previous, V-shaped bounce and saying that this is going to be another V-shaped bounce because we had basically a similar 78% loss, back during the GFC, and now we have another 78% loss. And the last time we had a 78% loss, it bounced back almost, straight up in a straight line. And basically they're saying, look, we had an exact, almost to the percentage, a 78% loss again, and we might do a repeat of the last time. The only difference.
Well, Joey, thanks for coming on today. We got to go to another break. I know you're busy. We'll catch up a little bit later today, and I appreciate the time.
We'll talk about oil.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Showing gold right now. Talked about it coming back and retesting that daily unfair high, and we're just continuing to climb as this show moves forward today. Silver, just if you're joining us late, just an explosion. Almost 17 now. Never even had a chance to come back and retest those weekly unfair highs around 1578 this week. Just, has powered through. I'm gonna go to the scanner really quick. Go to the futures section. And look at silver here. Just green across the board. Wouldn't think anything other than that right now. Here's the profiles, just almost at 17 as you can see it. Just, again, no reason to take the trade off really until we start using some of those profiles as kind of a trailing stop. So that's the way I like to look at those when you have that move in this magnitude. Sometimes you take trades off early. Those profiles kind of regulate the trade for me. We talk about that all the time. And by the way, we're doing a webinar tomorrow afternoon, late, 5:30, I believe it is. Sign up for it if you can. We're going to talk about strategies to use after finding opportunities in the scanner. That's the primary focus of the webinar. Should have a good time. Last time I think it lasted 2 hours. We'll keep taking the questions as long as we need to, but I think it's slated for an hour. Let's go back into the charts for just a second here. We're going to pull up Netflix. This is down significantly today. See if I can get it here. NFLX. Showing some pre-market action here. Getting below 100. Let's just take a look at it on the E-signal charts. Let's go back into this. Type in Netflix. So we're trading about 99 right now, right below 100. Here's yesterday's closing price. Before post-market pricing. E-signal's not going to update their dailies until the market opens on a post-opening situation. So here's the unfair lows, 97.85 on this. We're trading, and again, that's big-time support on Netflix. We've reached a low yesterday afternoon. What is that? 92.38, is that what that is? So that volatile action after the announcement has pierced this 97.85. We're trading back above there. This is going to be your support on Netflix, 97.85, to play defense below if you're going to try to pick a battle down here somewhere. This is going to have some volatility. I mean, even in the last 60 minutes, we've had a 3%. Just in the last 60-minute bar, you've had a 3% volatility component in here, and continue to expect that. The good news is, again, you've got something now to play defense against, and talking about trading the reaction instead of the initial action. We had a sell-off from yesterday's highs. What is that, a 20% sell-off? Yeah, I believe that's what it was. 20% sell-off from where Friday's close to what happened yesterday afternoon. That's pretty big for that type of stock. A lot of market capitalization there, without question. That's a big move. So again, make sure you play defense on things like that. You've got 97.85 to kind of, if you're going to try to pick some longs there. Let's take a look at Morgan Stanley. Had some announcements here. Let's see where we're at this morning. Looks like last print 25.85. All right, taking a look at Morgan Stanley and where we're at in the grand scheme of things. We talked about the financials. We're going to look at those really quick before we talk about Morgan Stanley. Again, getting above 22.37 on the weekly. It's hard to believe this thing's elevating like it is. Here's the daily on the XLF. So taking a look at Morgan Stanley and understanding that landscape on the weekly and daily profiles, you've got a stock really that just can't get out of its own way. We've talked about Morgan Stanley. We talked about top of the profile, 26.93. And right now, 25.85. So, basically this morning we're opening right there. This is a stock, in my opinion, that could bare minimum retrace back to 25 and even lower. Any type of market pullback is going to drag this thing down. In my opinion, you've got 22.5, 23.5 sitting down there as targets on this with any type of market pullbacks. And this is kind of a nice stock that's showing some relative weakness. If you're looking to short some things, this is not a bad situation. Another stock, IBM, news. The stock gets what it deserves sometimes, I think. Let's see, 146.52, so that's where we're trading right now. Here's the weeklies on it. Again, broke out above, go back and retest. Markets kind of dragged this up. 146, it looks like we're printing pre-market, 146.52. So, where's this thing settled down at? I think you've got 140.44 in order here. But what's happening right now is we're basically sitting at the bottom of a daily profile around 146. So we could get a little bit of a bounce here. I think the market may come off 2096 a little bit just because as those weekly unfair highs, you might have a lower chance to buy this in general. But right now we're sitting right at the bottom of that daily profile on IBM. And how do you trade this? Could have a little bit of a bounce off 146.30, but again, you have a chance to play defense. Any closes below 146.30, I think you use that as resistance to head down to 140. That's the take on IBM. Gold continuing to climb higher. Let's look at Pepsi, PepsiCo. Not a big reaction, a little bit of news here. The thing on PepsiCo, though, is, got a new profile attempting to appear that's somewhat bearish. And you're kind of edging down here and getting below 103.95 into the profile. And, I think this is kind of a no trade right now. I don't see a lot of relative strength or relative weakness in it. So, again, earnings related. Let's go back and look at November beans here really quick. And we've been talking about this, where do you take this thing off? There's really no hints, no reasons to look at this with any type of top here in order. We've talked about letting a fine wine breathe here, and this is one of those cases. We don't see any indications on any profiles to look at this. The 240s have been regulating this up. Everything's still fine with November beans. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're looking at the XLU. Talked about this yesterday. Talked about the POC 4844 on the weekly. Big, wide profile. Got to pay attention to it, as you can see. And that's coinciding with the bottom of this daily right there, that basing action there. And I like how the 10-year's acting, and I like how this XLU's acting. I think we can easily get back to almost to the 50 area and even higher. And I know it probably wasn't the best ETF to be in yesterday as far as the explosion in the last couple of days. But again, I just love how this thing looks. I think you've got a great chance to play defense here around 48.5 and below. Remember, your appetite for risk is your appetite for risk based on the stops. And I like how this is acting, obviously relative to the 10-year. 10 years climbing, going back to unchanged here. Had a little bit of a bounce. Housing starts are at 830. Here's the 10-year. Here's, again, that defense area, 130.07 right now. Let's go back to the broad stock market. Futures, 2094. Coming off a little bit off the weekly unfair highs. Remember, all breaths are just super positive right now. But again, this is a big inflection point to pay attention to. We could come off of this a little bit. Some weak stocks that have been showing themselves could come off based on that. A tenuous situation, I will admit, sitting around these highs here. But again, the stock market comes off a little bit. Notes go up. XLU, I think, would hang in there better than anything, in my opinion. Has really been an unbelievable play. So, all things considered, XLU, I like it. Let's take a look at the XLE. Again, I think crude oil coming into, the balance area, the weekly unfair highs. The XLE is climbing up. We're going to take a look at a couple of stocks that we might need to look at again here. Here's the energy sector. We're going to go into this. We're going to look at our little baby here. SWN, again, really, let's see where we're at now, 10.5. Looks like it's sitting on the launching pad here again. Profile appearing below on the daily. As you guys know, that's a very bullish situation to have a profile appear below price action. Here's the weekly. Doesn't have to go higher, but again, showing really good strength. Phillips 66, let's take a look at this. Come on, chart. Let's try this again. These are snap charts, by the way, so. Here we go, weekly. Not the best looking chart, I will add. I mean, I think this thing's kind of run out of gas, and in fact, could actually come off with any type of oil coming off. I'm not so sure SWN would. Let's look at HP. This is another one we had on the radar screen the other day. And why? Coming down into 56.16. Got a little pop here. Looks good. Play defense around that area. Murphy Oil. This one's Tom's been playing around with. Had a big day yesterday. And we talked about this 2 weeks ago. Again, profile appearing below price action, and look what happened. I mean, these are just esoteric things to keep in mind. Yeah, I mean, one of the questions I just had, we're getting ready to close the show, but profiles appearing below price action in general terms, bullish, above, bearish. Guys, you've been great. Stay tuned for Larry. We thoroughly enjoy it. Stay tuned for all the posts on TFNN. I'll pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.